And now to our market monitor, who's positive on equities and has stock picks he says will benefit from the strong U.S. economy. He's Erik Ristuben, Chief Investment Strategist with Russell Investments. Erik, welcome back. Great to see you. Talk to me about your view of stocks for the remainder of this year.
Look, we like stocks. We think they're going to be higher at the end of the year. If you're looking kind of to trade this, they may trade sideways until we see first quarter earnings, because the market is very concerned, particularly about U.S. stocks, ability to weather a strong dollar, and it's also worried that some of the weakness economically outside the states is going to actually affect U.S. companies more than anticipated. We don't think so. That's why we think we're going to be higher at the end of the year.
What about interest rates? You know, the debate this week was whether or not we're going to see a rate hike this year. Stanley Fischer weighed in on that with our Steve Leisman, saying this is probably the year. Does that worry you, or do you think the market has clearly factored that in?
Well, no, it doesn't worry me. It's actually what we're expecting. We think it's going to be in the third quarter. We think that the combination of better employment and wage pressure are going to start pushing inflationary pressures into the marketplace. You know, Mr. Fischer obviously talked about the fact that the commodities deflationary forces are subsiding. We think the wage pressure is going to actually take over, and the Fed will move in the summer.
All right, let's get to Erik. Let's get to some of your picks here. You got two out of the three. One, a cybersecurity company. The other, a victim of a cybersecurity hack. Let's start with a security company, and that is Proofpoint, PFPT, at 56.78.
Right, they're a small company. They're focused, therefore, mostly on the U.S. market. You talked about the cyber problems that a lot of companies have had. Cybersecurity is a growing industry. Proofpoint is growing in market share in that growing in that growing field, and we think because they're domestically focused, they don't have any dollar effect on their earnings. We think there's a really rosy future for them, and they're probably a takeover target.
Well, let's talk about about Target, now that you mentioned Target, because that's also on your list. Why do you like it?
Well, one of the reasons is it did not have a great year last year. A lot of consumer discretionary stocks had a tough year last year. We think that with a combination of lower fuel prices, giving the consumer more spending money, along with the fact that more consumers are employed because employment's significantly better, that's going to lead to consumption. We think Target, being a primarily domestically focused retailer, is going to do well and is well positioned for the kind of people who are going to spend in 2015.
Your third choice is Southwest Airlines, in the news earlier this week for having missed or postponed some inspections on its aircraft. Look at that run-up. It has almost doubled, Erik, in the past year. Does that kind of price spike worry you?
Well, it came off a relatively low base. Obviously, it was a better deal a year ago, but we still think it has more to run. One, we think oil prices are going to, energy prices are going to stay relatively low for a long time. Two, it's clear consumers, as one of your earlier guests said, are spending their money on experiences. Dining out is one of them. Travel, we think, is going to be the other one. We think a direct beneficiary is a domestic air carrier that has, again, no dollar revenue exposure to speak of. I think we're going to do well with that stock.
All right, Erik, thanks very much. Erik Ristuben, Russell Investments.